Well, it is Friday morning and it is time to talk money. We have our financial guru, Garrison the Third from Preservation Financial Group, here with us this morning to talk more about our dollars and cents. And Davis, always good to have you back on the show.
Thanks for having me, Amy.
Well, talking a little bit about the market, and of course a lot of us very familiar with how it has been this beginning of the year, not been good. In fact, you said some of the worst numbers to date.
Yeah, it's the opening 2 weeks of the market. It was the worst opening ever, and so 2015 was a very challenging year, and so one of the things that we do is use tactical, actively managed money managers, private wealth managers, and one of them that we use is Horder Investment Services in Cincinnati, Ohio. Drew Horder is the founder and chief investment strategist. And what separates these from the normal 60% equity, 40% bond portfolio that brokers design is these money managers have the ability, since they're actively managed, they can move your portfolio. If the market starts trending down, they can move your portfolio or de-risk it, as we call it, to a cash position out of harm's way. Like in 2007, 2008, when the market as a whole was down over 50%, the S&P 500 was, the worst that any of our active managers did was down 14%. So there's a lot of benefit in being able to have, and these are large institutional level private money managers, but being able to move out of harm's way when the market comes back. In 2009, the market bottomed out in March 9th, 2009, and then it gained back 80% of its losses in the next 7 months. And so these wealth managers were able to move back into the market and take advantage of that incredible rebound.
So for the average investor, that takes some of that anxiety out of market playing.
Exactly. Exactly. Mutual funds are pretty much required to maintain their holdings, whatever they may be, large cap, high yield corporate bonds, whatever it is. And so they have to maintain that holding. And that holding goes where the market goes, up, down, sideways, whatever. And so with actively managed professional retirement money design, we do not have those big swings. And so it's ideal for someone who just doesn't have the stomach for the market right now, or is more conservative and just wants less volatility in their performance.
Plus, then you don't have to worry about how long it's going to take you to make up those losses.
Exactly. A 50% loss requires a 100% gain to get back to even. So, and that's difficult in these, the way the market is right now.
And that's just to get you back to where you were.
Just to get back to where you were, yeah.
Getting you any further on.
Exactly.
So obviously these are becoming a lot more popular because they're taking that anxiety and that worry.
They are, and when people are in retirement for 25, 30, 35 years, which is not uncommon, if the market falls 30, 40, 50%, and there have been 23 recessions since 1900. They happen every 5 to 7 years. We're on our 7th year since 2008. And so if you're in retirement for that period of time, you cannot afford to lose 50%, have to gain back, 40% have to gain back, 30% have to gain back. You're going to go financially bankrupt and run out of money.
And that's not good.
No.
For more information on how you can get a hold of Garrison, you can find him at Preservation Financial Group right on Sunset Drive in Johnson City. You can check out their website for more information or give his office a call. Great to have you, Davis.
Thanks for having me.